Let's talk about taxes today, property taxes and buying a home. So I got an email this morning from a client that we were showing homes to a couple of days ago. Email says, Johnny, you mentioned the other day about payment differences depending on what neighborhood we bought in. Can you explain that again, or is it really enough difference to worry about? Short answer is absolutely it's enough difference to worry about. Fort Bend County has a wide range. We got a big bracket of a tax rate here. We run the gamut anywhere from about 1.8% all the way up to about 3.78%, almost 3.8%. That is a huge, huge difference. And if you're looking at a new home or used home or whatever, you can, the amount of money that you spend over the life of that you own the home, you 7 to 10 years or longer, is going to be it's going to be dramatic. I mean, it can be big. So I put together a couple of examples. I'm going to go over one here. I've got some more on the blog post just so you can see how this works. Okay, so now what we're not talking about here is I'm not even talking about home payments. I'm talking about just total money being spent that you don't have to spend depending on what neighborhood that you're in or what the differences is going to be. You're going to have to pay property taxes no matter what. And if you got a homeowner's exemption, it's going to save you a little bit, of course. And we all know that Fort Bend County tax appraisers don't really get the concept of putting a good, accurate value on the home to tax you at it. Some are more and some are less. It's crazy, right? But what we're doing here is using a consistent amount, and we're going to put in the differences in there depending on what neighborhood you're in. And sometimes it can be the same neighborhood. One neighborhood can have multiple tax rates depending on where at in the neighborhood it is. Sometimes a lot of differences. So make sure you pay attention to the tax rates that you're looking at. But here, let's go through an example right quick. We're going to compare a pair of rates. We're going to compare 3.78 to 1.88. Now that's a pretty wide difference, but it is the same difference that we've got right here in the Fort Bend County, just a few miles apart. Okay, now I made a note for this exercise. Again, we're not going to be concerning ourselves with homeowners exemptions or the fact that Fort Bend County doesn't know how to put a proper appraisal on a home. But this is just to demonstrate and compare. Okay, so we're going to be looking at two homes. Each of these homes cost $350,000. The only difference is home number one is going to be taxed at 1.88% property tax total, and home number two total is going to be 3.78%. Okay, that 1.88% equals $6,588 a year. Okay, but home number two at that 3.78 is going to be $11,230 a year. Big difference. It's the difference of $6,642 yearly. And it always starts to keep going up more as they reappraise it and try to tax you more each year. So we're just using that 6642 right now, though. That's going to come out to $553.50 a month. That's a lot of bling. $553 a month difference. Same price home, same county, same school zone. $553 difference in your payment each month just because of the tax rate. That's a lot of money you can be using for other bills, for groceries, for taking your family on trips to Europe, whatever you want to do. But I know one thing it can also do, and this is something that you get overlooked when we're looking at homes sometimes, and this is what brought his question up. $553 right now in today's interest rate, which is 3% or better. So $553 a month at 3% interest rate on 30 years buys you about $131,000 worth of your financing money. In other words, if you're looking at a $350,000 home at 3.8% interest, at 3.8% tax rate, and you think you can afford a $350,000 home there, that means you can afford about a $475,000 home if you buy it in a 1.88% neighborhood. That's huge. Okay? Don't overlook these tax rates. They make a huge difference in how much money that you're paying. And not only that, and this is a big deal, but that extra money that you're paying isn't going into your equity. It's not being applied to your equity at all. Don't forget that. So that makes a big difference too. Anyway, That's the quick Q post for the night. Have any questions about it, email me, johnny@fm359.com, or text me or post on the Facebook page, however you want to do it. Love to hear from you. Talk to you later. Bye.